All right, guys, welcome to our first This Week in Crypto stream of October, first crypto stream of Q4 2023. Lots to go over this week. It's been a topsy-turvy one where roughly half of the altcoins have gone up, roughly half have gone down. Bitcoin has eked out a mild gain over the past week as it looks to regain that 30K level for the first time since the summer. And there are some big stories that we're going to go over today, and we'll try to uncover exactly where markets are most likely to head next based on our reliable indicators that help to indicate exactly where and when prices will start to take off once again. And of course, if prices are about to drop, we'll try to explore that as well, not just for Bitcoin, but for some of the assets that you have your eye on that you'd like us to help explore on this call today. So get your questions ready, drop some requests, and our final 15 to 20 minutes or so of the call, we will do that as always. I want to remind everyone that we don't do straight up investment advice on this channel. What we do is we look at probabilities and objective analytics to help piece together what is the most likely scenario without straight up saying, crypto's going to the moon, crypto's about to drop off the face of the earth. None of that. We don't do that here. We are very much about the math and the analytics, and we appreciate you understanding that. So with that said, we will start with our data screener here as we typically do. And we've got some outliers, of course. You can see Bitcoin, as mentioned, plus 1.5% over the past week. Ethereum down about 2.9%. But Solana would be one of those outliers, up about 13.5% over the past week. And Avalanche, on some news that we'll go over, it has helped boost the asset up to plus 16% over the past week. We can also see Bitcoin SV over here up 12% and Render up 13%. So those are the big gainers, but you can see plenty of assets have kind of declined. None, at least in the top 60 or so, have been serious droppers, but you can see Alito DAO took a 4.5% hit, Aptos 4.3%, Cosmos 4.2%, Stellar 4.7%. These were kind of the limit of the large caps and how much they fell off. Of course, there's some smaller, more obscure assets that did drop a little bit more, but we typically will focus on these top 60 or so. And you'll notice this is our first week since we missed last week due to the company's travels. This is the first week that we actually can see no duplicates, right? We no longer have like 5 different versions of Tether or 5 different versions of USD coin or Chainlink showing up on this screener. It's one asset per, or I should say one blockchain per asset, since all of the percent changes are still going to be identical, whether they're on the Ethereum or Arbitrum or Binance chain network or whatnot. So that should come more helpful for you. And I recommend checking out our new and improved screener that our team has worked so hard on over the past couple of months here to make this a fresh facelift that's amazing, in my opinion. We can also see on the social volume end, Bitcoin not really moving much. It's being discussed at about the same rate as last week. Ethereum, though, they're definitely seeing an uptick, 12.4% more as people eye whether that asset can finally start to break through above 1,700 and beyond. XRP, they're getting a big discussion rate boost, undoubtedly due to the fact that the appeal filed by the SEC was denied by the judge, making it so that XRP is even more solidified as a security. I'm sure it won't be the last, attempt to try to deem it to be a security, but it was a big win for XRP overall, even though the asset has dropped 2.2%. Other notables, Solana, as you would expect, a huge rise in discussion after its big week. We can see Chainlink over here, modest 10.5% rise. biggest droppers, we see that Tether, which was a big topic last week, is not being talked about as much. Same with Binance Coin. A lot of the meme coins, as you would expect, because meme coins have not been doing a whole lot for a few months now. Dogecoin down about 28.5% in discussion. So those are just a few highlights here. You can see overall the screener market cap, essentially all of the assets over 2,600. Very modest rise at about a plus 0.4% boost. And then the volume has actually dropped pretty significantly, actually, at minus 27%. So that's worth keeping an eye on. Even though prices are kind of scattered a little bit up, a little bit down, the amount of trading volume on all crypto assets has dropped quite significantly in the first week of October here. Okay, before we move on to some charts, and even before social trends, let's take a look at some of the leading stories that we talked about on our Twitter. If you aren't already following us there, or on our YouTube, of course, or on our LinkedIn, where we're now posting there as well, you can catch our insights on a daily basis on all three platforms. We may even have a few more in the near future, but for now, make sure you're subscribed to one or all of those to see the latest as you browse those respective social medias. Beginning with one of our more popular stories, we're seeing a pretty big uptick in specifically wallets that hold anywhere between 1 to 10,000 Bitcoin. I know that's a wide range. They hold about 70% of the overall supply, but these are kind of the very, very small sharks. 1 to 10, call it what you will. Maybe you even have friends that hold this amount, but these are still including some of the smart money traders out there. So for the sake of this study, we included them alongside the usual 10 to 10K, which we deem sharks and whales. And even without that, we are still seeing accumulation. But when we include 1 to 10, it's even more striking that there's some serious accumulation going on right now, especially just in the last couple of days. You can see this big increase here from the 3rd to the 4th, and then again on the 4th to the 5th, making it so that they now hold 15.2 million Bitcoin, which is the most they've held in almost 2 years now, since January of 2022. They're also within about 90,000 Bitcoin, which is just 0.59% of the all-time high that they held back in November 2021, which most of you may know, that was the all-time high for several assets, including Bitcoin and Ethereum. So always a good thing to see that we're starting to approach the same kinds of accumulation numbers that we saw during the month where market values were at their greatest. Moving on to another story, just a little thing on wrapped Bitcoin, which obviously has the same price as Bitcoin, but does have different on-chain and social metrics out there. We're seeing a huge surge in wrapped Bitcoin $1 million plus whale trade. It's the highest amount we've seen in 6 months, and it's the highest amount of network growth, which is the amount of new addresses created, in about 3 months. Further, this little blue line here, that shows how many wrapped Bitcoin addresses there are that hold between 1 to 1,000 WBTC. And this is an all-time high, folks, of 4,953 wallets. So worth keeping an eye on there. We've seen wrapped Bitcoin generally be a predecessor to where Bitcoin goes next. It's obviously not a perfect science, but when you see this line go up like it did in early June, it can often kind of run ahead of where Bitcoin's price goes. And we saw it both June and back in early March, right before this chart cuts off here. But when you see this kind of accumulation, good things generally happen. This obviously isn't the same level just yet. We might need a little more time. But if it's any indicator of what's to come, you can usually be pretty happy with the fact that WBTC is being accumulated by this group of sharks and whales out there. So keep that in mind. I think that's a pretty good sign for the future. Besides that story, whoops, make sure to that's okay. Another one here is Ethereum. They are continuing to just move coins off of the exchanges right now. 10.66 million ETH on exchanges is now the lowest amount held since May of 2018 after this drop here. As you would expect, that coincides with more off of exchanges now, which is up to 115.88 million, about 14 to 15 times the amount that is on exchanges, and that is an all-time high. As I mentioned, Avalanche is having a big week, and part of the reason is that it has been boosted by an application known as Stars Arena. And on this application, people are able to buy shares and they're able to tip others for useful posts that they may like. So it's a high incentivized platform that allows more coins to sort of circulate with ease and sort of donate to people that they deem useful in the space. If that's something that intrigues you, you can of course check it out. We do not sponsor them or have any sort of affiliation at all. But what we can say is that it has caused Avalanche to rise. And it isn't just Avalanche that can be used on it. We anticipate that Bitcoin, Ethereum, XRP, Cardano, some of the largest assets in the space could benefit from the fact that this application exists. And so far, it's being talked about quite heavily, and we've seen the impact on our social trends here. That's something to keep in mind. One other story is the fact that Patrick McHenry has been appointed to be a new interim House Speaker after Kevin McCarthy was ousted. Why is that relevant in crypto? Well, Patrick McHenry historically is a very pro-crypto House Speaker and someone who absolutely can, especially if he can be influential or his interim level becomes permanent, he can start to bring crypto more into the limelight in terms of US Congress and have them discuss it more, potentially making laws more friendly for crypto. So people were very excited about this when the news came out a couple of days ago. Perhaps it's just speculation, but generally speaking, more people in Congress who are pro-crypto is undoubtedly going to be something traders are going to rally behind and be more optimistic about, leading to higher prices, even if there's no news directly about what Patrick McHenry has decided yet. Just the fact that he is now appointed in a key space in the US means there could be good things coming. All right. Before we get into the asset activity matrix, why don't we take a look at the current social trends? This is as of about 3 minutes ago. The number one story, if you have been following social media for about the past day and a half, Sam Bankman-Fried, the infamous former owner of FTX, has been in headlines once again. They are U.S. Congress is figuring out what his future will hold. Gary Wang, the former co-founder, testified, and he made some pretty damning remarks about Mr. Bankman-Fried, as he stated that he allowed Alameda Research to withdraw unlimited funds from the crypto exchange, and that this revelation came during the trial where Wang also admitted to committing wire fraud with Bankman-Fried. So pretty damning evidence there that could be bad news for not just Sam, but Gary himself with that admittance. ThorSwap also in the news. It's moved into maintenance mode after detecting a series of illicitly linked funds being funneled through the platform. So if you've been following this asset, which did go through a recent rise a couple of weeks ago, be a little bit cautious of the fact that its network is not acting as consistent as you may want or expect. NFTs have been starting to be discussed a little bit more. The darlings of 2020 and 2021. There's new anniversary NFTs out. I won't get too much into it because I know there's only a few people that are still actually interested in NFTs watching this. But if you are starting to get the itch, there's definitely been an increase in discussion for the first time in a long time. And you can also see Bitcoin and Ethereum down here at the 8, 9, and 10 spots. That's generally a good thing. More discussion about the top two assets by market cap in crypto typically is good whether or not people are bullish or bearish. More discussion for them is good regardless of the nature. All right, so moving on to some of the charts now and some of the main on-chain and social metrics that we look to help identify what's driving prices up or down or anything in between. We'll start here with volume and on-chain transaction volume, which actually has been picking up quite a bit. We can see this specific volume spike back on Monday. This was when prices exploded, got to about 28K before retracing just slightly. This was the highest volume spike in about 5 weeks or so. And it did seem to coincide with a rise, meaning there was some interest in trading more often with a price rise rather than a price drop. That is a good thing. It shows where traders' sentiment lies right now. They are showing willingness to drive up prices once prices show a bit of momentum. So obviously things have kind of ranged ever since, still at about 27.5K, so within reach. If we see another attempt at 28K and this volume bar comes right back, that would be a good sign that we could finally move our way toward 30K. We can also see transaction volume. It's taken just a slight rise once again. If I draw some lines here, we can see how it kind of declined here and then started to pick up about 2 weeks ago, moving back north once again. Not a huge rise by any means, but if we can get back toward the same kind of transaction volume that we saw in mid-June, just prior to this big explosion, generally a good sign. Moving on to some of our other utility metrics, we have daily active addresses, which has come with a little bit. We noted over the past 2 to 3 weeks, there was a pretty big rise in daily active addresses. The same phenomenon occurred on Ethereum's network, and the likely explanation for this was all of the FTX liquidations that were going on in the middle part of the month. And with tons and tons of dormant coins suddenly being moved and at least temporarily taken out of the banks of the former FTX exchange, that added onto some address activity numbers that were previously pretty dormant there. So as much as we wanted to get excited about this, there was kind of a logical explanation that was likely to be temporary, and sure enough, numbers have dropped down, not quite down to where they were in August and July, but they're showing signs of kind of normalizing now. Circulation, very mild pickup, but nothing to get too excited about. I didn't preload this ahead of time, but if it was fully loaded right now, it would show that there's still a lack of circulation compared to the overall market cap. And it really hasn't changed much. So keep that in mind. Be a little cautious of the fact that utility, at least on the amount of unique tokens being transacted, it's still pretty mild at the moment. All right, moving on to some average trading return numbers. Typically, the lower this is, the more likely a rise can occur and the less risk there is in opening or adding on to your position. We can see that the 30-day MVRV is slightly above 0%, meaning there's a very modest risk in adding on right now. Plus 2.4% for addresses that have been active over the past 30 days. More or less, we can consider that a neutral signal. 365-day, we see that the average traders that have been active in the last year are up 10.3%. Again, pretty modest, just a slight risk on both the short and long term, but this certainly isn't any indicator that a continued rise can't occur. I'm going to load, this one really quick to show on the MVRV subject that most altcoins are actually showing slight semi-underbought signals. And this is definitely worth keeping an eye on. Yes, there's some exceptions. Loom has obviously been running up like crazy. Maker, Merit, Litecoin, Kyber, Storj, STPT, and even StormX. But other than that, almost all assets on this model are showing that there's a neutral signal or semi-underbought signal. So when we go to Bitcoin and we see that it's just slightly semi-underbought, that's not the case with altcoins, which have continued to kind of lag behind for most of the last 3 to 4 months now. And that does indicate that when things start to turn around, there could be a little bit of an altcoin rally looming, pun intended here, with Loom being just overbought signal. All right, so we touched on MVRV. As far as funding rate goes, it's interesting. It looked like the funding rate shorts had started to die down, but traders are continuing to bet against the asset in short spurts, and then it goes away for a while. I still think this is a good sign. Let's zoom out here a little more to give you more context. This is the past year of funding rates. We have generally seen much bigger short spikes, like here in May, this was I think the November one here and the mid-March one were really good telltale signals that we're getting close to a bottom, because these are huge bets against Bitcoin, and those are just asking to be liquidated, meaning that the shorts are closed out due to prices rising. And when we see these short spikes, it isn't just a good sign that shorts can be liquidated and boost prices, but it's also a sign that the sentiment toward the asset is quite negative. And we have long since been on the record stating that prices move the opposite direction of the crowd's expectation. And when the crowd is expecting prices to fall off, that increases the likelihood of prices rising. And these two instances were very telling. This one was a little more interesting because we had some big short spikes here. There was some ranging, right? Like we still had prices go up more than they went down following the spike, but eventually once neutralized, it dropped a little bit more and then took off for reasons related to all of the ETF announcements back here in June. So I don't see any serious shorts here, maybe some very mild ones. It's still a good sign that, we're not seeing crazy longs. You can see all of these long spikes that have been a little bit taller back over the summer than they have been over the past month. That's a good sign. So a lot less people that are, opening up those big leverage longs and getting greedy. But more or less, I'd say funding rate is looking more neutral than it has in quite a while. Whale transactions, notice a little bit of a spike actually just today. That's interesting to see. I mean, we've got a little over 10,000 whale moves deemed any transaction over $100,000 in value. This is the largest whale spike since August 16th or so. So a little month and a half high there does indicate that the whales are a little more interested, and we will touch on that more momentarily. through those supply tiers for now, and I'll touch base on the ratio of on-chain transaction volume in profit versus loss in just a moment as well. Network realized profit to loss is neutral. Take a look at exchange flow. The amount of supply on exchanges is down at the lowest level since December 2017 right now, currently sitting at about 5.74%. So always a good sign to see supply continuing to move off of exchanges. We don't want to get it so low where there's just nothing to trade and then circulation dries up. And that's kind of been the case. It's the amount of utility toward the number one market cap asset in crypto has been staggeringly low lately. But at the very least, this indicates that the likelihood of future big sell-offs are pretty limited. Moving back into the last 3 months, we can see that social dominance is starting to rise a little bit again. It was really bottoming out here in the last week of September, but getting back to about 22.7% of discussions isn't too bad at all. Bitcoin's looking pretty healthy in that regard. Weighted sentiment, we can definitely see that the sentiment is quite bullish, and at least in terms of the discussion rate and the difference between positive versus negative commentary toward Bitcoin. This is likely due to the fact that it's had a lot more price dominance than most of crypto for a few months now, and this past week is no exception. I mean, we just saw the MVRV model showing that most were slightly underbought, while Bitcoin is actually just a little bit below neutral, indicating there could be a little tiny bit of overbought, of an overbought signal going on there. Development activity, if that's relevant to you, it is showing that there's a little bit of an uptick in Bitcoin over the past couple of weeks as well. Okay, we'll look at the ratio of on-chain transaction volume and profit versus loss really quick, and then we'll move on to the whales, kind of the meat and potatoes of this call. So these are the top cap assets in terms of the ratio of coins moving at a profit or at a higher level than when they first obtained the coins in their respective addresses versus loss, which means that they're moving the coins at a lower price than when obtained. Right off the bat, we can see that this past week had a huge spike in XRP, lots of profit taking going on, coinciding with that news that they won the appeal, or the appeal was dismissed, I should say. Bitcoin also had a very big profit week. And obviously that was when prices topped out. Ethereum even, I mean, lots of big profit taking numbers going on for BTC, ETH, and XRP. And obviously, as you would expect, prices did correct, which is usually the case when you see that level of profit taking. Same thing back in mid-September. We saw almost all assets, or at least the main top cap assets here, having profit taking and then correcting down. And then all of a sudden we see these negative spikes and it moves back up. That's typically how things work. So what we're looking for as this week kicks off, and I advise you to check in on this with your Sandbase Pro membership over the weekend and going into the start of next week. See if these bars start to get negative again, which are typically going to coincide with bottoms. If we see another week of this, watch out. It means there might be a little bit too much profit taking. And this is kind of a daily slash weekly signal. So if you're looking for something a little more short term compared to long term like MVRV and mean dollar invested age, this is a great place to start. Okay, whale time. Let's take a look at how our big players in the space are doing at the moment. I'm going to bring up our main chart here, which I love to check in on. Let's get rid of TUSD and USDP as they're not really big deals compared to these three. Yeah, we'll just look at those three. So we'll take out BUSD and DAI as well. It's worth noting that DAI is seeing a little bit of accumulation, which is still a good sign. But the main three that can really help identify whether markets are hitting a turning point. We have Bitcoin here, where we're measuring the overall percentage of holdings from addresses with 10 to 10K BTC in them. We have Tether with $100,000 up to $10 million in terms of that range and how they are behaving. And then the same rate for USD coin. So we'll start with Bitcoin here in bright green. And we have some encouraging signs. As mentioned, ever since October 2nd, things have been rising. We had this big uptick between the 2nd and 4th, and then a very, very modest climb just in the past 24 hours as well. If we go all the way back to August 17th until now, there has been an accumulation of about 0.158% of the supply. That may not sound like much, but if we look at this in terms of absolutes, we'll just go 10 to 10,000, hit confirm. This yellow line indicates between August 17th and now, the last more or less 7 weeks or so, there has been an accumulation of 60,250 BTC. That is hundreds of millions of dollars, and clearly indicates that the confidence level is starting to rise. And you can see, I mean, they were dropping from early July until mid-August. And all of a sudden, after the big drop in mid-August, as always, or not always, but most of the time, you'll see sharks and whales start to become opportunists and accumulate coins while they're at a decreased value. And, you know, sure enough, ever since this accumulation, you know, we have the price at 26K back then. At its peak here on September 30th, prices had gone up 7.5%. So they have profited ever since and are looking to continue that profit because, you know, they're now holding 13.05 million, easily the most coins they've held in the past 3 months. If we go back here, it's actually been, the last time this tier held this much was November of 2022. This was right before the FTX collapse. And you can see they were dropping heavily going into that news with Sam Bankman-Fried and Gary Wang and all of the players that kind of eroded the confidence of crypto temporarily. So regardless, I love the look of this yellow line. This level of accumulation is indicative of confidence from the key stakeholders in Bitcoin and indicates that eventually, assuming this pattern continues or at least stays put, BTC could very well rise and make some money for these sharks and whales. And if you have no other strategy in crypto, following the largest stakeholders in Bitcoin or your respective assets that you have confidence in, it's never a bad strategy. All right, Tether, on the other hand, let's zoom in again to the last 3 months. So this is indicative of the amount of buying power, essentially on both exchanges and non-exchanges. The amount of stablecoins being held by you know, those key sharks and whales who are active, holding between 100K to 10 million, can really shed light into when a big purchase of Bitcoin or some other asset is going to happen. And it's looked pretty good here over the last 3 weeks. Since September 14th, they've gone from holding about 37% of the supply to 37.4%. That's again, hundreds of millions of dollars in just that 0.4% of the supply. And USD coin is looking quite similar. It's kind of dropped off a little bit over the past week, but nevertheless, I like the look of this. And there's some other things we can look at. Let's just open a blank chart template really quick. Got a template here. Percent of stablecoins held by $5 million whales. Now, this has dropped pretty significantly. The whales holding between 5 million or at least $5 million, I should say, has flattened out a bit over the past week, but it was dropping for quite some time. So keep that in mind. They're still holding about just a little over half of the overall supply. And then another thing I wanted to look at, if I go to USDT here, and we look at supply on exchanges as a percentage, look at this. It's gone, 3 months ago, it went from 20.9% of Tether on exchanges. Now it's up to 24.94. So just about a quarter of Tether is on exchanges again, as opposed to a little over 1/5. That's a big jump. And that matters because even though we're not talking about sharks and whales, the overall supply, if you're talking about, micro or small or mid-sized traders, they have collectively moved almost 5% of, I should say 4% of the available Tether supply onto exchanges, indicating that there is definitely an argument that some big crypto can be bought in the near future. And if we zoom out here, let's go to the last year. And then let's lock this and switch back to Bitcoin's price. They were dumping between last October all the way until April. And this was right after that local top occurred, a little above 30K. One further dump here. And ever since mid-June, right before, not a coincidence, but right before that big surge, due to some of the ETF news, they started to really move stable coins because they were gaining confidence. It's kind of gone up ever since. Now, there's still a long way to go to get back to where they were a year ago, which was above 40%, believe it or not, of Tether on exchanges. But we're at least moving back toward that direction, and I like the look of that. Okay, a few other stories here, and then we'll take a few questions. So this is our asset activity matrix. We first introduced it a couple weeks ago here on this stream. And we've got some updates after missing last week due to travel, as I mentioned. There are a few more improvements to this, mainly the hot and cold tab, which is essentially like the anomaly. It's the same setup for it, but what this does is it'll actually show, a hot or cold box regardless of whether there's an anomaly going on. So you can use this model in two separate ways. If you just want to look at the really big extreme spikes out there for about 170 different assets all on one page without having to scroll, this is your home base right here. But if you want to look more for, eyeballing whether a network is hot right now, as we can see Lever, for example, with all these hot red boxes, that's an easy way to identify it right off the bat. On the other hand, something like Stargate Finance, you can see all these blue boxes indicating that they are seeing particularly low levels of address activity, network growth, even whale activity. It's all very low. So if you're looking for projects that are picking up or dropping down compared to their 3-month average levels of address activity, network growth, social dominance, etc., this is a great way to kind of identify that. And I've even got some of the largest market caps highlighted in purple, so you can easily kind of pick them out of the crowd. And you can see Bitcoin right here, for example, kind of a mixed bag. We see an uptick in whale transactions as we just checked out. That's why that box is red. It should be pretty intuitive, and we're always open to hearing feedback and how we can improve, whether you like it. I want to hear it all, good or bad. Cardano, still pretty cold here. Chainlink actually has warmed up quite a bit. You can see lots of red boxes there. Curve, it's actually quite cold lately. Dogecoin, we really only have one metric that we're tracking right now, and that's social dominance, which has been cold. Ethereum, kind of a mixed bag. Maker was a huge story last week. It was really starting to decouple from the rest of the space. And you can see the remnants of that with a lot of hot network activity, but it started to cool off now. Matic neutral, DAI is pretty neutral. XRP has kind of come back to earth. Shiba is particularly cold. As I mentioned, meme coins are not getting a lot of attention or utility at the moment. Tether's pretty average, and USD coin is pretty average, just to name a few. If we look at anomalies just on the current day, now here I'm looking at the lowest available box and trying to find any red or blue boxes. We can see Cartesi is having a very low address activity day. Let's see what else. DAI had some big upticks in ratio and profit to loss and exchange flow balance, meaning there was a lot more DAI moving to exchanges for the first time in a long time. Tether yesterday had a big uptick in address activity. That's worth keeping an eye on. And then I'd say Aave is probably the biggest current day asset to keep an eye on, as it has had a big anomaly in transaction volume, address activity, network growth, and whale transactions. And let's take a look at that to kind of check the validity and make sure that the model is giving us accurate information, which I'm sure it is. We'll load up our main template here. Yeah, sure enough. So let's go to the last 3 months. So as you would expect, the last full day was October 5th, and that is what our latest day is, because again, this will not load until it has a full day. So you'll notice the current day is blank. Between 5 p.m. Pacific and midnight, all 7 boxes are filled up because it's showing a current full day of data. But other than that time frame, it's going to show the latest day being yesterday, because that was the last time we had a full 24-hour cycle. We don't want to show partial days, or it'll mess up, the calculations to show whether there were anomalies or not. So back to Aave really quick. Huge uptick, almost a 3-month high in transaction volume, and trading volume even got to its highest level since in about 2 months or so. So big uptick there, big uptick in address activity as the model suggested. MVRV is about even right now. Whale transactions have been huge, but I mean, this is indicative that there's something going on here. And we can kind of look at context now that the model's brought Aave to our attention. Aave's price is sitting at about $68. So if we look at sharks starting about here, 100 to 1,000, small whales 1,000 to 10,000, big whales at 10,000 to 100,000. Yeah, it doesn't actually look like they're accumulating. If anything, this is a slight dump. If I just merge those 3 tiers together, not a big dump by any means, but over the past week, yeah, I mean, they've dropped about 0.6% of the supply. So a little bit concerning there, if anything. Big profit taking that happened at the turn of the month. Slight dormant activity. That curve is starting to flatten out a little bit from the mean dollar invested age. And supply and exchanges is also moving up. So I think this network appears to be hot due to some slight bearish signals, and I'd be a little bit concerned about Aave right now. You can see the big exchange flow balance spikes going in both directions just today, and supply moving up to almost a quarter of the overall supply on exchanges. So be a little weary of that. Social volume even jumped up to about a 2-month high there, and all of that extra discussion has really boosted its weighted sentiment. Development activity is fairly normal right now. So yeah, Aave looks to be a little bit concerning, if anything, based on those red boxes here. The red boxes aren't always going to mean it's good or bad. what this essentially will do is bring certain assets to your attention where you can then make an assessment as to whether, whales are accumulating or dropping, or if there's some other news story related to it. Another one might be lever that we can check out really quick, as it's showing a spike in transaction volume, a spike in whale transactions, and a spike in exchange balance. So let's take a look at those three really quick, and then we'll do a few quick questions, assuming there are a few. So this is LeverFi. This is the 395th ranked asset. It really didn't start to get big on-chain activity until mid-August. So we're less than 2 months into, a modern look at how the on-chain and social activity looks. But yeah, as the model indicates, big spike. Looks like the largest of all time. $28.07 million worth of transaction volume happened yesterday. I can see why. I mean, the asset was going nuts when between September 13th and October 3rd, the price went up 151%. And then since that time, it's dropped more than half of its market cap, down 51%. So maybe there's some bottom timing going on here. And we'll check the whales for some extra context. Circulation, also a huge spike. So it does look like there's some knife catchers, meaning people are trying to time the bottom and hoping for a second wave up. Whale transactions, yeah, I mean, we see this big $1 million plus whale transaction spike, but the numbers are fairly low because this is, barely a top 400 market cap asset. But that still does show there's some increased whale activity, but what is the context? That's the question. So its price is pretty minuscule, 0.001. Let's take a look at here. Actually, that's the number of addresses. We want to look at the percentage held. So we'll actually start at 10 million plus. Kind of a mixed bag, not really anything special. This does indicate that there's more supply just moving out of the whale, or at least the top whale addresses. Maybe we'll just look at these two and keep out the founders' addresses because that can be a bit deceiving. Yeah, not really looking great. It does look like during all of that circulation spikes and on-chain transaction volume upticks, there's not a lot of whale accumulation going on. Even with the 51% drop over the past week or so, it doesn't look like the key players are accumulating right now. So that would tell me that the rally or a second wave may be more unlikely due to this. So that's a little example of how we can use the asset activity matrix. You find the assets that are showing some fireworks, and then you look at the context a little bit more on Sandbase. So hopefully that's helpful. And now let's take a couple asset requests if there are a few, Balrash.
Yeah, I think we can start with Wi-Fi, Urine Finance.
Sure. That's maybe just YFI, right?
Yeah, exactly.
Not YFII. Okay. All right, Wi-Fi. It's been a while since we've taken a look at this one. So Wi-Fi has been pretty suppressed ever since it hit that big local top back in late July. Its price has fallen about 25%. Trading volume has mostly been declining. We can see a pretty clear pattern here between mid-August and early October. Transaction volume is pretty unspectacular. So not much activity there. Circulation, not much activity here either. At least daily active addresses is no longer really dropping. It's more in the neutral territory. But yeah, utility and overall usage is pretty low at the moment. That Isn't necessarily a bad thing though. What is a good thing is the fact that its MVRV is showing some pretty big trader pain, a mild loss over the past 30 days for active traders of Wi-Fi. They're down about an average of 1.2%. And then the 365 day, that's where it looks a little more juicy. The long-term active one-year traders are down about 28.5%. If we look historically to see how big of a deal that is compared to past bottoms for Wi-Fi. Yeah, so it's lowest it's gotten over the past year. Let it load for just a few seconds. Its lowest was back on June 17th, where it got to about minus 70%. That's an extremely low number and very indicative of a bottom typically, even if it's a small asset. If long-term traders are down 70%, they can only fall so low unless, of course, the asset is a rug pull or the founders abandoned it and that became public information. Then all the bets are off. But Wi-Fi, as far as we know, even though it is not seeing the same development activity, and its founders are actually somewhat vacant, it does still have some viability and is being used in the DeFi space on a daily basis still. So I would say that being down here at negative 28.5%, that's a pretty good sign that long-term traders may have some solace soon and at least some temporary rebound that they can be happy about. Funding rate, nothing really special. You saw all the shorts that were happening back here in May through even November. That was, of course, when the FTX collapse happened. But yeah, nothing really big in either direction right now. Whale transactions have really dropped off. Do we have, let me see if we have any whale data on it. Yeah, we do. Okay, so Wi-Fi is currently at about $5,300. So we can start looking at sharks right about here. And sharks are not really moving too much in either direction. The whales are going to be these two. They're actually looking a bit better. So addresses with 1,000 to 100,000 Wi-Fi have moved up pretty significantly since the end of last year. They hold about 5% more than they did. So they're still hanging on, and they believe in the asset. That is a good sign to see. Over the past month and a half, it's a mild drop, but I still like the long-term trajectory of moving back up throughout 2023. Not a lot of dormant activity, very little network realized profit or loss right now. The supply and exchanges has been pretty flat. It's at about 29%, which is a little high in my opinion. There is a lot of tokens on exchanges, so I'd be a little weary about that. Anything over 20%, there could be a big sell-off at any time that impacts the overall market cap. Social dominance, not really too many big discussion days going on for it. And development activity, as mentioned, it is still being developed, even though the main founder, why am I blanking on his name? His last name starts with a C, but he's a pretty well-respected figure in the space. And he stated about a year ago that he was stepping away, but I know there's still a dedicated team working on the Wi-Fi asset on a daily basis here, and this chart here proves so. So overall, I think the Wi-Fi outlook is pretty neutral, not a lot of utility, but I do like the fact that whales have been moving in this direction throughout 2023. That's a good sign still, and sharks are pretty much neutral. All right, you mentioned Cardano, Balresh. Should we end with that one?
Yeah, let's give that one a look.
Let's do it. All right, so interesting phenomenon for Cardano. It's kind of been this way throughout 2023. Just massive, massive rises in transaction volume. I've yet to hear a compelling explanation on why, but regardless, the utility for ADA has just exploded. I don't know if it's bots or what, but it's continuing to rise over time. If we look at some of the context going back to like 2018, just want to make sure no, it's not the highest by far. We actually had larger on-chain transaction volume back in mid 2020, and it really dwarfed what we're seeing now, surprisingly enough. But regardless, I mean, this transaction volume is incredibly high. Trading volume is pretty neutral. If anything, it's declining still. So it's hard to really make anything out of this because despite the rise, prices ever since its peak on July 13th have dropped about 27%. Circulation and address activity, fairly neutral. We had one little outlier in late September that did signal a bottom, mind you, but it's kind of fallen back down. I do see that a lot of these circulation spikes for Cardano in the past have been signals that prices are about to rise, even if it's a very temporary or short-term one. That's what we want to look out for here. But lately, circulation has been pretty stale. 30-day MVRV, we do see that the active traders are up about 4.3%, while long-term are still down about 19%. So a mixed bag there, a little bit overheated on the short term, but fairly juicy still on the long term. Funding rates, very neutral. The shorts, unfortunately, have kind of dried up. We would prefer to continue to see these big red spikes indicating people are non-believers in Cardano, trying to ride the wave down, and that would, in turn, increase the likelihood of the wave moving up. Whale transactions, almost eerily consistent, where we're getting, I mean, this has to be related to the on-chain transaction volume, where there's just such a oversaturated amount of these large transactions going on that it's hard to really find anomalies, at least since early June, the last time we saw some big spikes. And I guess this one big spike on July 14th, which was right when the local top occurred. But for now, look for some sort of uptick, even if it's a modest one like this or this in red. That would be a good sign that Cardano could be getting some accumulation. And if we look at the context, with the price at about 26 cents, we can start with the 1 million or more tier, which has actually really dropped off. 10 million or more. Okay, so that's actually fine because a lot of the 1 million to 10 million have moved into the 10 million to 100 million range. If we combine them, get rid of the excess line. So they're hanging on to a little over half of the supply. Let's put the price on. Let's go to last year. Yeah, so they really started dumping hard in early March. Started adding a little back in late May, and they've been up just a little bit ever since. I do like the look of this. Just in the last 2 weeks, they've added back about 0.43% of the supply. It's a start, but there's still a long way to go to start getting back to where they were, back a year ago in October when they were holding 58.6% of the supply as opposed to 51.6. They hold 7% less, just about exactly, compared to a year ago. So not a great sign long-term yet for Cardano. I like the very small uptick that's happened in the last couple of weeks. Nothing too special on the ratio of on-chain transaction volume. Social dominance, pretty neutral. A little more optimism This does indicate, especially because social volumes have been flat, that the ratio between positive sentiment versus negative sentiment commentary is starting to show some optimism. This is the most positive we've seen since April, and that's a pretty big deal. And then development activity, Cardano is always a top three asset in terms of daily innovation and improvement. So they're pretty much in its normal range right now with about 232 per day at the time of this recording. And that covers Cardano. We touched on several assets today and some pretty big stories. Hopefully this was helpful for you. Follow up in the comments or just hit us up on Discord. If you don't have the Discord link, just check our Twitter really quick and we have it right there in our link tree. I want to thank you all for joining after our week off last week. Appreciate our loyal community here. And we're always open to have conversations about anything going on in the markets. Stay patient. I know it's been a lot of frustrating ranging for a long time, especially for a lot of the top cap assets out there. But, we've seen this kind of pattern many times before. People get frustrated. The amount of conversations and players in the space start to decrease. And then all of a sudden there's a big spike and everyone starts talking about it at the Thanksgiving dinner table. So that said, have a great weekend, guys. Stay safe and warm, and we will talk to you next week.